could have sworn.
All right, guys. We're live.
Live. Close your eyes. Listen to my words. And dream.
Alright, guys, so we are out here doing London session, 36 minutes into the session. Dog laughing? Barking?
hungry. Can you look at love pets? Your hourly dose of pets. I'm busy. I'm busy. Can you come back in about like an hour? Please? It's not. Guys, we got 20 minutes, about 18 minutes left in this 4-hour candle here on Dax. This is what I'm looking at.
Nothing really meaty at the moment, guys. Everything's looking kind of slow.
Always gotta check the news, guys. We don't really have anything major until New York session. This is why we may see the we got CPI today. Yes, sir. That's why the market's low. High volatility event today, CPI. At 2:30. 4 hours and a half from now. Yeah, so you can see a lot of consolidation here in this area. This right here is a very strong level. People are selling like no tomorrow here. I can almost assure you. No middle line. I just want it to be red. All right, people are selling. Okay, people sold here for sure in this area, and their stop losses are right above here. Now, this 4-hour candle here also is a potential zone where price can come and retest that zone. So meaning this candle could induce buyers, make people think that indeed you have a buying opportunity. And if you're trading the correct way, you should have a stop loss. So that should put your stop loss at the lowest levels. So the lowest levels that you see are what? Probably somewhere here, okay? People bought here. These are important lows, important levels of liquidity, levels where price wants to gravitate towards because it wants to close out orders, or because there are orders pending there to be opened, and at that moment in time, the algorithm decides, depending on the amount of orders, the amount of contracts between buyers and sellers, whether it goes up and down, and et cetera, et cetera. But you want to be part of the movement that liquidates those people. I don't know if I'm making myself understood, but ultimately, what I want to do right now is maybe, take this. I just don't like all this noise for you guys to be able to understand a little bit more. All right, so these are areas where price wants to go. All right, this is where there is a lot of liquidity here. All right here. We have liquidity sitting right here. We have more liquidity sitting, especially down in this New York lows from yesterday. The way I look at trading is this is a business, right? And you want to be able to manage how much of an exposure you have into the markets. The timing is very important because, for example, we looked at, I was working on this chart over here to my right, guys, so you guys can see a little bit better. And I'm going to put it over here now. All right, this is gold. All right. So ultimately, there is liquidity in every single one of those places where you guys see this little money sign, right? These highs, these are places where people, when they are charting out a risk to reward ratio, right? And these people saw this black candle, what did they do? This black candle means there's a lot of sellers in the market, right? I think anyone who's a little bit literate about trading We don't have to go over what's a bullish or a bearish candle, meaning just a candle that goes up and a candle that goes down. A white goes up, black goes down. Simple. Price goes up, price goes down. So people put their stop loss here, right? Their limit, maybe a 15-point stop, right? They saw this black bearish candle, boom, boom, sell. Yeah. Well, if they charted it out that way, even if they give themselves a little bit more room, right? That's a 1 to 2 risk to reward ratio. Maybe people took profit here, all right? But also people saw this white candle here, all right? This white candle, right? It's now going up. Oh, this is white candle. It's gonna go into a buy. Bam. What do? They put stop losses right below these levels, right? Whenever price reaches this level here, what happens is the system is automatically going to take you out of the position because that is your risk maximum, your risk limit. All right. It all depends on how much lots you're playing into, meaning how much money you're risking, how big your position is, obviously. But you want to be a calculated trader. You want to know exactly how much you're risking at the moment you're risking it, so that you're able to see what the risk to management, what the risk to reward is going to be, and manage it appropriately. All right. So people put their stop loss there. Usually a normal trader shoots for a 1 to 2. All right. Now market may come indeed over here to this point. All right, to these places here where there's a lot of stop losses like this one. It may just take the price, manipulate it. All right, you can see price right now do something like this, take these highs, all right, liquidate these people, close out these orders right now. Oh man, well, if that person wanted a 1 to 3, that person was shooting for more, right? Now that person is waiting to take profit, and if they did not put their stop loss at break even, what happens? The market comes, takes them out, and the market could easily, from this point, after that has taken these people out, come back down here and actually end up going in the direction, right? So where the market goes, there's some orders to be filled and there's orders to be taken out. Okay, this is not the way that we like to trade, right? With those big risk to rewards, it's not really my style. I like to take opportunities where the stop losses are a lot tighter. I like to know if I'm right or wrong in no less than an hour and a half. All right, I'm here to make money or find out that I'm wrong in no more than an hour and a half. I'm not here to be sitting on the computer 6, 7, 8 hours. First of all, it's not healthy for you. Your brain starts seeing things that are not really happening on the chart. You may see that price is fluctuating in one direction, but in reality, you've been looking at that time frame for so long that now you are completely unaware of what's really happening on the bigger time frame, right? What's happening in the bigger picture, you know? Because you're so focused, you've been on the computer so long that all you're seeing is this, right? And if you're an experienced trader, if you're a seasoned trader, you know the effects of being on a computer for a long time. All right, you start to think it's a buy or sell. You get over anxious of maybe needing to take a trade because you've been sitting on the computer for so long that now it feels like you need to take a trade because you need to get something out of it. So you want to minimize your exposure as to how long you're trading for. Okay, when you sat down, when is it that I'm going to exit? How many losses am I going to take? Where's my limit as to what my brain and my psychology can take to be able to make the best decisions possible? Because we're here to make logical, calculated decisions. We're not gambling. So very important, guys, that we take a look at not just what's happening on the small time frames, you know, but also look at the bigger time frames and make sure that we're not staying on the computer too long. All right, I've been on the computer for about maybe 30 minutes now. I have maybe another hour in me, and like I said, we have news, really heavy news coming out today during New York opening, which is in about 4 hours and 23 minutes. So price may be just consolidating, which means accumulating orders. So people thinking that it's buying, people thinking that it's selling, but in reality, it could just do something like this, where price comes. Oh, what happened here? Plays around this area, plays around, induce people into maybe sell, and then boom. You know, because the kind of candles that we may see today. Oh wait, oh, what's happening? This kind of candle that we see today, guys. I'm just gonna fix this because it looks ugly. It's gonna look something like this. All right, this is where people either make a lot of money or lose a lot of money. All right. This daily today may be looking like this, and we can see a real push to the upside, right? A candle, we call it the FU candle, because it will induce sellers, like in this scenario here. Price comes here. Oh, price is gonna start selling off now. Bam, people put their stop loss. Where do they put it? Right there. Right. I'm not saying that's what's going to happen, because price, I think, right now is going to go up and then liquidate these people and come down. But if that was the scenario, where are the stop losses? Right there, right there. So with the high volatility today, that event, the CPI, all right, core price index is a number that comes out. It's a statistical number. And depending on the outcome of this number, you know, you will see a very strong fluctuation in price, which ultimately causes price to just simply take out a lot of orders in a very short amount of time. So as soon as 2:30 Hawaiian time or 8:30 New York time hits, you will see that there will be either a big FU candle to the upside, ultimately taking all these sellers out from previous weeks, right? All these highs are over here, right? Look at all these highs. Oh man, this looks yummy. This looks just completely delicious for today's taking. Honestly, I think that's what's gonna happen. But yeah, you'll see a big candle to the upside, or you can easily just see price do whatever it likes, because it does whatever it likes, not what we like. You could just come here and induce, and then boop, come and take these lows. All right. Very big candle in about a minute to sometimes 5 minutes. All right. A lot of people get taken out because they're either oversizing on their trades and gambling, and that's not what we're here to do. So for now, guys, I don't really have much. And I feel like price right now is inducing buyers to just come and take these lows right here. This space right here is very suspicious. Then maybe go up. Had a lot of selling off. You see this big impulse movement here? It's a big movement to the upside. Look at this. That's somewhere about 730. That's about a 700, 800 pip. 800 point move. At some point it had to retrace. Look at this big retracement. All right, when there's a big retracement, you can't expect price to continue to just drop. There's got to be a pushback. All right, because there needs to be balance in the markets. Unless it's an instrument that's really volatile, for example, like Bitcoin, it does whatever the hell it wants. It doesn't really follow any pattern. Usually these candles have patterns, right? The market repeats itself in cycles. So when a cycle is identified by traders like myself or anybody else, people step into trades, the market moves. You want to be part of those strong movements, but to the correct direction. I'm gonna give it another 18 minutes, guys. See if you see a really good opportunity for us to get into any trade. As of now, I don't really see a lot. I don't really like this gold buy here at this point. There's a lot of liquidity sitting right here in this area, and that's probably where my stop loss would be, if I can be honest. I don't want to be shark food today. That's funny. Alright, this is liquidity right here, guys. I'm not liking it. Price can just come and whoop, induce buyers. This is about 65. Yep, about a 5-point stop there. Big, strong selling order block here. So price can just easily start retracing. If I'm going to take any buys, it's going to be from here. Put my alarm. Look at this, 7 seconds remaining in this 45-minute candle. It's not what you want to see when you want to step into a buy. Look, it says price weakening right there in that area. As I'm saying, price really wants to drop over here, and I think it's just accumulating orders and buyers to come and just take them out. Yeah, I really think that price is gonna come and take these sellers out here. That's what, a 61.63. Oof, I really like this trade, guys. Oof, I really like it. I don't know why. I like the different thing there. But there's this 1 hour order block here that I'm not liking. This price could easily just take this and keep going up. Guys, we're gonna take a stab here at this. Okay. I'm gonna risk about $1,000 to make another $1,000 here. I really want to see these lows right here get taken. It's gonna be our first take profit, guys. Actually, once we reach about $1,200, I'm gonna take this position off here. All right, we're in a little bit of drawdown there. Gonna raise about $1,500, guys, here. Okay, guys, I'm about to close. I really like this. I'm gonna put stops at break even. Come on, baby. You can take these lows. Guys, I'm taking profit in 2, 3, 1, go. All right, guys. 1,000 for the day. I did not want price to come in reverse in this zone over here. All right. I have my stops at break even. I did not want price to come in reverse down on this side. But I can definitely see price coming and taking this right here. Because of this high volatility event coming up, I decided to take profit really quick and not be a part of this trade anymore. I just wanted to take pay myself for the time that I spent today on the charts and continue to go on about my night. And that's what you should always aim for. Make some money and go. We are actually $1,900, $8 short of the actual $2,000. So we took some losses yesterday, but like everything else, you are here to be in a business where most of the time you're not gonna know whether you're gonna take a loss or a win. You're not here to predict the market. You're here to participate in the market in a way where your probabilities are high, the way that we just took this trade. Okay, I want to look at this tab. I don't want to take it out of here. Price is gonna keep tanking from here. I can definitely see these lows get taken for sure. Like I said before. it would have been like maybe, sure, when did we close out? We closed it out at 33.59. Oh, man. We could have been maybe another $1,000 in profit right now. The could have does not work in trading. This is why I mentioned it. Could have, should have, but didn't. You didn't execute. You weren't part of the move. If the price is already away from the point of where you were supposed to take that trade, don't take it. You see right now? This is very, very likely that price manipulates every single time. People thought that it was buying. What did it do? Oh no. People had their stop loss right there, guys. What did I say? Oh, people, oh, this was a buy signal. Bam. 5-point stop loss. What happened to these buyers here? Yeah, they were in profit. They were in profit for a while there. But what did the market do? It came in and manipulated. And it took all these people out. I typically do not like being on any session after 10:30 my time. That means it's already been 1 hour and a half of people being there, thinking and formulating ideas as to what is going to happen, and formulating ideas as to what is going to happen. Oh, sorry about that, guys. So, yeah, that was it, guys. Told you guys, big zone where people are selling gold. And what did I tell you guys? I told you there was liquidity sitting over here in this area, right? I forgot to put the money sign there, and this means liquidity. There was money sitting there where people would stop losses right in this area. All right. And that is what you want to be a part of. You want to be a part of that strong movement that comes and take those people out. Yes, we can continue to hold from here, right? We can continue to say, well, we took it over here. I got a 5-point stop loss here. Yeah, we can continue to take this, right? But what is the probability that I'm going to keep taking down? I don't know. Do I want to be on the computer so long and figure it out? No. Like right now. I'm going to go, and I'm going to come back for New York session. I'm going to see what has happened until then. So for now, I'm going to go ahead and close this out. I'm going to take my money and I'm going to go. See you guys in New York.